Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia. One stock that is in focus in today's session from the real estate pack is a prestige estate which reported numbers. Let's quickly take a look at the highlights. The revenues have seen a marginal dip of around 13%. Operationally, the margins have come in at 31% versus a 24%, and the profits have gone up around 30% for the quarter. To decode more, joining us on the show is Irfan Razack. Mr. Razak, good morning and welcome to the show.
Good morning.
Mr. Razak, my first question coming to you is how has the quarter been according to you? Has it met your internal expectations?
No, the quarter has been brilliant because we've clocked in almost 4,000 crores worth of sales during the quarter. And that has really boosted the entire expectation that we had. And that too without too many new launches. Only Bangalore, we had one single launch. And with this, I believe that there's a lot more potential. And we had given a certain expectation guidance for the whole year, and we are on course to exceed that.
Right. So overall, if you have to see in terms of the kind of sale, the kind of margins that we've seen, what has led to the expansion in margins this time around?
No, certain times margin. See, now there are two types of accounting system. One is the operational, where we have the sales as well as the collections. That is what we need to focus on, because under Ind AS, the real estate companies have a different method of recognizing revenue. So certain times, certain revenue gets recognized only after the delivery happens, after possession has been handed over to the customers. So in effect, in the company today, we've got almost 50,000 crores worth of revenue that has not yet come into the books in terms of recognition for the P&L. So that will keep coming as we keep producing, keep delivering the product over the period of years. So when I say almost 50,000, it's sales of 3 years. And these 3 year sales obviously have not come into the P&L or balance sheet only for the reason that it's work in progress. And the day the work in progress gets consummated and the product gets delivered to the customer, that is when the recognition comes in. And of course, margins, sometimes what happens is you also have some exceptional items, so that boosts it up. But net, I believe PAT margins will remain in that between 10 to 12% after all expenses. And we are quite happy with that number.
Right. Overall, in terms of ongoing, we have 50, the company has 54 projects, 75 million square feet of development between residential, commercial, retail, as well as hospitality. From these segments, what is expected to drive growth, and what's the target timeline to achieve, execution on all of this?
Yeah. See, now, as far as residential projects are concerned, like last year, we did almost 13,000 crores worth of sales. The previous year was 10,000, and the previous year was some 8,800. So now all these 3 years sales have, as I said, haven't yet come into the books. They just, the sales are there, the collections are coming, the production is happening. And of course, this first quarter, we've got the 4,000 crores. So all this sum total, we have to look at it. And if you say what is driving growth, residential, yes, we have a churn, we sell, we produce, and then the cash flows keep coming in. That's how, if you see collections are pretty robust. Last quarter, we've got 2,700 crores worth of collections. And that churn keeps happening, and we have a lot of internal accruals and free cash flows. Now, where do these cash flows go to? Are where we are producing for annuity, that is office, retail as in malls, and in hospitality. So this additional cash flow either goes in to buy more new land, which is raw material, or it goes in to produce annuity assets. And the annuity assets, of course, there's a certain contribution that comes in as equity, and the rest of it comes in like debt. So that's why certain times you also have the lumpiness, and debt goes up. But I believe once the asset is produced and starts yielding, you rentalize it, and it becomes a self-liquidating debt. So there really no cause for concern.
Right. So overall, how have the realizations panned out? And are you seeing an uptick in terms of prices?
Yeah, realizations have gone up. And if you look at this quarter, we've got an average realization of almost 10,000 rupees a square foot, which I believe is pretty healthy. And that if you look at that, the interpolation is that the margins also will be pretty healthy as we go along. Of course, now we've got a new market, new geography in Mumbai. So Mumbai prices are higher. So that also adds up and averages up and gives us a more healthier look.
Right. And then overall, from a residential perspective, what are the segments which are coming in as growth drivers, and where are you seeing some bit of stagnant, view?
Right now, everything is selling. But
Hmm.
according to me, the baseline is always mid-income. Mid-income is where we need to focus. We have to look at the affordability barrier. We have to look at where people can afford, where people can get a home loan and buy. And it's the mid-income will keep driving the sales. Yes, there's a premium and luxury. At certain times, you have a good demand. Certain times, it gets slowed down. And I said today, both all segments, mid-income, premium, and luxury is selling, and so the party is on. But at the moment, as a baseline, I believe if we focus more and more on the mid income, that is where the revenues will come, and it'll be pretty steady. Margins may be a little lower, but then at the same time, that's what will keep you going.
Right. And, I think this quarter, Mumbai almost contributed 500 crores in terms of the top line. How significantly do you see the contribution increasing from here on?
Yeah, Mumbai last year gave us about 2,500 crores in
Hmm.
total. And this year also, we are looking at Mumbai contributing between 3,000 to 3,500 crores. We have some significant launches in the pipeline, and we are very confident that we'll exceed that number. But if you ask me on a long term, I look at Mumbai giving the company a minimum of 10,000 crores. Of course, it's not going to happen today or tomorrow, but it will happen eventually. That's what we are looking at. Bangalore is giving us 10,000 crores. Mumbai should give us 10,000 crores, and Hyderabad should give us 10,000 crores. And that's our game plan.
Right. Overall, Mr. Razak, the other income has seen a significant increase this time around. What does that pertain to?
No, that's why I said, see, certain times we have a certain exceptional items, and this is the other income, and that is the valuation on the REIT that we had invested with Blackstone. So we have to account for that differential between cost and the current market. So it's a notional thing. So that's what's brought in that additional profit.
Right. And from a debt profile perspective, our debt to equity in terms of the company is 0.61 times. Is that a comfortable number, and any chances where it might go up from here on, taking the kind of construction activity, the projects that are in the pipeline?
Our endeavor always is to see that we try and minimize borrowing, to see that we get our internal accruals and cash flows. But like I said, if I am concentrating on building malls, hotels, and office for rental, I definitely the differential between equity contribution and the additional money that's required to produce and hold these assets has to come in the form of debt, or it has to be come in form of some equity contribution I get from some fund or the other. So, but that is always a balance that we keep working on. Our endeavor is to see that our debt doesn't get so spiralingly high, which we can't manage. And at the moment, we are in a pretty comfortable position and very easy to service what we have already borrowed.
Right. And my last question coming to you overall is, what's the overall land area, that the company already has, and how much of it is already under development?
No, it's a dynamic situation. See, as a company, we don't really believe in buying land and holding on to. Our psyche always has been, once you have acquired land, it should get converted into a project almost immediately. So it's a dynamic thing. You keep acquiring land in various geographies. You work on getting the design development done, getting the approvals, and bringing it to the market in terms of launch. So it keeps changing, and so there's no fixed number that I can give on that. Uh, but things keep moving. Of course, certain times when you're aggregating land to do a larger development, that takes a little bit of time, and so that stays on the balance sheet for a little longer.
Right. And lastly, will this be as strong a year that we've been seeing the last couple of years, perform? Will that be similar to that, or will it be better?
I am very, very confident that will be much, much better than the past 2 years.
Right. So that's going to be an interesting one to watch out for. Thank you, Mr. Razack, so much for joining us on the show. And congratulations once again. And good luck for the coming quarters.
Lovely talking to you.
Always a pleasure to speak to you. So that's the management of Prestige Estates. In fact, it has been a good run for the real estate players as a whole. And it's interesting to see how the coming quarters also pan out, taking into consideration the kind of sales that we've been seeing that have been picking up in various regions as well. That's all that we have on this session. Lots more lined up today on BQ Prime. Please stay tuned. Thank you.